REITs versus multifamily syndications. What is the difference? Which should you invest in? Let's talk about it today. So what are you actually investing in? A REIT, or a real estate investment trust? You're actually buying shares of a company, just like you are buying shares of any stock on the stock market. But a REIT, that company's business is owning real estate, but your ownership is actually shares of a company. Now, when you invest in an apartment syndication, you're actually sharing ownership of actual property itself. So how many assets are you actually invested in? Well, with a REIT, you just own how many shares you own, but the company itself can go out and own 10, 20, 100 properties in a fund model. But your ownership is how many shares of the company you bought. Now, in a real estate syndication, typically a syndication is formed to buy one specific property. Now, who has access to these? Well, a REIT is traded on the stock market. So as long as you have any kind of trading platform, if you have Fidelity, you have Vanguard, you have Schwab, you should be able to go on and buy shares of any REIT that you can find. It can take a matter of minutes. Now, syndications are private offerings. Typically, you need to get to know the operator. You need to take time to look over the business plan, get to know the property, watch a webinar, fill out a lot of paperwork, wire money. It's going to take a matter of days, weeks, even months sometimes. It's not quick, but in my opinion, it shouldn't be. It's a lot of money. It's your hard-earned money, and it's money that your family's relying on. So take your time and make a good investment. Now, what about investment minimums? With a REIT, you're buying shares of a stock. So whatever the price is that day is what you're paying. It can be as low as a few bucks. But with syndications, multifamily syndications are expensive. Typical minimums can be as low as $50,000, but can be as high as $500,000. It all depends really on how big a property you're buying and how many investors the operator is willing to deal with. That's going to dictate the investment minimums. Now, let's talk about liquidity. When you buy a share in a REIT, you can turn around and sell it 5 minutes later. Think of it just like any other stock on the stock market. As long as there's a buyer in a market, you can sell those shares almost instantly. But with an apartment syndication, you should really think of your money as illiquid and locked up for the duration of the hold. Some people like that, some people don't. Your money can be in there for years. Now, what about tax benefits? Of course, consult with your CPA here, but when you invest in a REIT, most of the dividends that are sent out to the investors are treated as ordinary income. Yes, the company is buying real estate and the depreciation benefits are included, but those are all factored in before the distributions go out to investors. Now, when you invest your money in a multifamily syndication, you get all the tax benefits just like you're buying your own investment property, including depreciation and interest write-offs, and that can help to offset your income that you get each year as a return on your investment. Plus, the income you get each year from a multifamily syndication falls in the passive income bucket. And what about the returns? So historically, REITs return something like 12.5% average annualized return, which, don't get me wrong, is a great return on your money. I wouldn't dissuade anyone from owning shares of a REIT that's giving you great returns like that. But with multifamily syndications, I've seen investments in my portfolio that earned as low as 17% average annualized return. We've seen as high as 38% average annualized return. Now, of course, every deal is unique, every deal is specific, and no one should be promising you returns on your investment. So do your due diligence, choose a good investment, put your money in, and watch the returns come. So which would you rather invest in? Now that we've gone over the basics, to be honest, I think it's good to have a bit of both in your portfolio, but at least now you know what you're talking about. My name's Chris Collins with Amity Cashflow. We'll talk to you more tomorrow about investing in apartments.